Hello, everybody. Michael Meyer at Meyer Capital here. Really excited to give you this quarterly update. For those that are invested with us, you're going to hear about what's going on with our properties. For those of you who are interested in investing with us or want to learn more about multifamily, let me start off by telling you at the beginning of this email, which is a lot longer than it normally is, but we have so much to share. We start giving an example of a deal that we passed on, a 264 unit apartment building. It was listed at 37 million, and on paper it looked really good, but the cap rate didn't make sense at that price. The cost of the debt was higher than the return on the property from day one. So we walked. And it's important that you understand that most deals we look at, we walk on, and understanding why we don't engage in those deals, where our discipline comes from, what we care about, and how we protect your capital is something very important as an investor for you to know. So if you want to learn more about how we work and how I think about deals, you'll want to follow me on LinkedIn because I break apart deals every single week. Now, for those of you who are invested with us or curious how our deals are going, I got some really great news. First of all, let's talk about the Grove. We just closed on March 23rd, so congratulations to all of you who got in on this opportunity. And we're off to a really strong start. 6 move-ins since closing, steady leasing traffic, and renovations are ramping up. The team is doing a really great job resetting the culture at this property, so read more in the email with some further details. Now, the Post is at 84% leased. That's up from 82% at year end. And leasing is actually outpacing construction right now. So that's a really good problem for us to have. Now, with that said, really awesome news here. Distributions for Q1 are tracking at 100.18% of our original underwriting. So everything is going to plan there. And that's exactly where we want to be. So excited to share that. Now, we also just closed on the Grand Parkway Professional Center. That's a commercial property in the Houston area. So different than the multifamily stuff that I share here often. And in the future, I'm going to share some information about that as well, so you can see different assets that I like to diversify in to see if it's something you would like to do the same. And finally, after yesterday's Fed meeting, we are seeing here that rates aren't going anywhere anytime soon. And that puts pressure on people who are over leveraged, operators who purchase properties at a much higher rate. Now the rates are expiring. They have to get a new loan, and the rates are much higher than they used to be. So they're stuck. That puts a lot of pressure on them, and that means more opportunity for us. So we'll keep you informed. If you're invested with us and you want to learn about any of the properties you're invested in, please give me a call. I'm happy to talk to you about what's going on and give you further details. If you're curious to learn about investing in real estate in a passive way, please reach out to me as well. I am happy to chat with you as well. And don't hesitate to share this with anybody that you know. Please read the email. It's much longer than we normally have it, but there's so much to share in this quarterly review. So I hope you find it educational, informative, and talk to you soon. Thanks so much.